And so I think you're going to see a big leg up in the price of gold. That's going to kind of mirror the magnitude of that initial move from 300 to 1900, which is a six-fold increase. Well, $10,000 gold is just a 4x gain, right, from here. So 4 times. And, gold from 2001 to 2011 went up more than that. So, I mean, but, 4x in 4 years would be pretty big. But I think that there's a lot of pent up price appreciation. Because from 2011 to basically 2023, the price of gold didn't really go anywhere. It got to 1900 in 2011, and it got to about 2000 in 2023. So in 14 years, the price of gold didn't go anywhere. It just went sideways. And that was kind of the environment that kind of gave rise to Bitcoin, because people were getting frustrated that gold wasn't going anywhere. And so they were buying Bitcoin, and Bitcoin was going up. But now gold has just started to rise again. We've taken out all that resistance. And so I think you're going to see a big leg up in the price of gold. That's going to kind of mirror the magnitude of that initial move from 300 to 1900, which is a six-fold increase. But I think you're going to see that increase in a shorter period of time than the 10 years that it took, for the other six-fold increase. But it's going to be proportionate to that. And I think the catalyst is going to be the rate cuts, the resurgence of inflation at the same time that the economy is in recession. And that sidelines the Fed from even pretending it's going to fight inflation. And so without that pretense, the bottom gets, falls out of the dollar. And I think, the stampede or the quiet walk out of the dollar is going to become a stampede. We really accelerated the need to get out of the dollar with the sanctions on Russia. And, that was a big wake up call to the rest of the world that, you better de-dollarize or you're next. Like what's happening to Russia and Putin can just as easily happen to you if you're dumb enough to keep U.S. dollars, right, as your reserve and U.S. treasuries. So, the world, got the message loud and clear. I'm getting out of this currency. And so that's already underway. But that is going to accelerate when there's an urgency to get out, because then they start to see the dollar falling. And then, you don't want to be the last one holding the bag with the dollar. You want to get out while you can. So I think you're going to see that big break in the dollar. Their all-time record low for the dollar index is about 70. And right now we're just above 100, 101. So, we have a ways to go to crack to all-time record lows. Again, I said we'll crack to an all-time low against the Swiss franc probably early next year. We'll be at a record low against the Swiss franc. But it may take a couple years for the dollar index itself to make a record low, which would, mean a big move up in the euro, the pound, the yen. As bad as those currencies are, and they got a lot of problems there too. we just got them in spades. But once the dollar really cracks through that support, it could just free fall. And that's going to be a big catalyst for gold. It's like the emperor has no clothes. The debt is going to increase exponentially while she's president. And so we'll be at 40 trillion. I mean, we could easily be at 50 trillion of total national debt during her first term. If we add, if we're doing 4 or 5 trillion of debt per year, I mean, who knows? But there are other things, other plans that she has that if they pass would really create a lot of problems for the U.S. economy. But what is going to happen is our creditors are going to come to the unmistakable conclusion that we can't pay our bills, that the numbers are just too big, that it is impossible for the U.S. government to honor its commitments. Everybody thinks, well, the U.S. government is never going to default. We need to default. Default is the best way out of this debt situation. But if we don't have the integrity to default, if the politicians can't do that, then they're going to inflate. And inflation is actually worse than default from the perspective of the creditors and everybody else who owns dollars. The people are going to lose more money to inflation than they would to default. Because if the U.S. government defaulted, they wouldn't have to completely default. We wouldn't have to tell people you get nothing. We could give them 30 cents on the dollar, something like that. I mean, we could reduce the debt to some manageable level. But inflation is going to wipe out even more than that. I mean, inflation could wipe out more than 90% of it, maybe 99. Who knows if we have hyperinflation? But I think that when our creditors come to that conclusion that they should have come to years ago, but they didn't. But when they come to that conclusion, nobody is going to want to hold U.S. treasuries or any bonds that are denominated in U.S. dollars because they know they're not going to get their purchasing power back. They know there's going to be a default through inflation. And so then it's impossible for the U.S. government to borrow money. It's impossible for almost anybody to borrow U.S. dollars. So how's the economy going to survive that? It's just going to implode. Yeah, well, first of all, you don't have to look for another dirty shirt in that hamper. That's what everybody misses. Gold is not in the hamper. Gold is not a dirty shirt. It's the cleanest shirt we got. And that's what would replace the dollar. Because before the dollar was the reserve currency, gold was the reserve. That's what all the central banks, including the United States, held as the reserve. And when we convinced the world to leave the gold standard for the dollar standard, it was with the understanding that we would stay on the gold standard. And not only would the dollar be backed by gold, I mean, the dollar was gold. It was defined as a weight of gold. But not only could those paper notes, Federal Reserve notes, not only would they be backed by gold, but they would be redeemable on demand in gold. So even though Roosevelt made it illegal for U.S. citizens to convert their Federal Reserve notes to gold, foreign governments could always take their Federal Reserve notes and get gold at a fixed rate of $35 an ounce. And so when we broke our pledge in 1971, when we defaulted on our promise and we told the world that the notes are now worthless, that they used to be IOUs for gold and now they're IOUs for nothing, the dollar got marked down, but it didn't get counted out. It lost about 2/3 of its value against the Deutschmark, the yen, the franc, but it stayed as the reserve currency. And that was the beginning of the huge problem, because once we realized that the world was dumb enough to hold our worthless paper as a reserve, that's what started the massive deficits. That's how we went from the world's biggest creditor to the world's biggest debtor. That's how we went from large trade surpluses to massive trade deficits, because we could print money and get stuff for free. And so when the dollar starts to collapse and central banks want to divest and everybody wants to get rid of dollars, they're not going to say, okay, well, let's try the euro on for size. Why would they want to do that? Why should the euro be the reserve? The yen? Are you going to use the yen? I mean, come on. They can't. I mean, the yen isn't. They can't use the pound sterling anymore. You're right. There are no currencies that are worthy of the dollar's crown. The dollar's not worthy of it either. So what the world is going to do is go right back to gold. That is the obvious choice that everybody is ignoring. Talk about like the elephant in the living room. So people are complacent. Oh, the dollar will be the world's reserve forever because no other currency can. Paper currency needs to be backed by real money. That's the problem. We have a monetary system right now without any money. We need to anchor the system with real money. The paper is a money substitute. It only has value if there's real money backing it up. And gold is the best real money that we've discovered. And that's where we're headed. So the question is, when does the world go back to the gold standard? Not does it, But when? But the history of the world for hundreds of years is gold is money, and that history hasn't been rewritten. Gold's going to continue to be money for a long time. This period where it wasn't used as money will be a footnote in history and a lesson to be learned. So this has created this false sense of complacency that the dollar will remain the reserve currency indefinitely because there's no other currency that can take its place. But people are missing the elephant in the living room. The obvious choice to replace the dollar is what the dollar replaced, and that's gold. And so that is where we are headed. We are going to return to the gold standard. That is the norm throughout modern history, was to have gold as money. I mean, that's the problem with our current monetary system, is that we don't have any money anymore. We just have paper. But currency needs to be backed up by real money, and that is where we're headed. So it's not a question of will or even if we're going to return to a gold standard. The question is when. How soon is it going to happen? The sooner the better, as far as I'm concerned. But I think we're a lot closer now than we've been in the past. And I think that circumstances are certainly evolving in a way that makes not only that return inevitable, but close at hand. I mean, look what they did after the 2008 financial crisis. Look what they did after, COVID. That's their playbook, and I just don't see them, working with another. But the longer it takes, the worse it's going to get. So it's not a good thing that we've succeeded in postponing the inevitable, because we've made the inevitable so much worse because of all the additional problems that have been added as we were, postponing the consequences. So it's going to happen. And yeah, you can dismiss what I'm saying and think, we got another 20 years. Schiff could be, wrong for 20 more years. Maybe the national debt can go to 100 trillion. I don't know. I mean, who knows where it would be, right? If it can continue for another 20 years, maybe 200 trillion. I don't know. But at some point, it's like the proverbial straw that breaks the camel's back. A lot of straws have been piled on the camel, and so far it's still standing. But that doesn't mean it can take an unlimited weight. It just takes that one more. And so look, during the 20 years that I've been warning about this, the price of gold has gone up more than 8-fold. So it's not like we haven't seen any consequence. Gold has beaten the Dow, even if you took the dividends of the Dow. And I think the move is just getting started. And we've had all these crises over those 20 years. I mean, it almost fell apart in 2008. I mean, I could have been right, if we didn't have a big bailout and kick the can down the road back then. And we had all those QE programs that allowed us to get to where we are now, but at great cost. As I said, we made a deal with the devil, and the devil hasn't come back to collect yet, but he's coming. And it's going to be a big price to pay for what we did. But, I'm still telling people to prepare for it. It's going to happen. It is inevitable. There's an investment strategy that you can make. You could have a portfolio of non-U.S. assets, of value, dividend-paying stocks. That portfolio is actually doing quite well now. I mean, it's this recent move. We've seen a big rotation out of momentum and growth type stocks to defensive value, dividend-paying stocks. I think the big move in commodities is coming, a much bigger move up in gold. I think gold stocks are, the sleeper investment. Nobody is buying these things. They're as cheap as they've been. The major U.S. stocks are trading at a big discount. You look at the Newmonts and the Barrick Golds, they're at a significant discount to the S&P 500 as far as multiples, and that's historically an aberration. Normally, the gold stocks trade at a premium to the S&P. So it's rare that they're at a discount, and they're at a substantial discount. But I think the big thing with gold stocks is going to be just a parabolic move up in gold that's going to, increase profits dramatically, and not just increase profits, but increase the value of their reserves. Right. Because there's a lot of gold reserves that are being valued at zero because it's very expensive to get the gold out of the ground. But it's going to be a whole different ballgame when the gold price is a lot higher. And now gold that has no value becomes extremely valuable. And now all of a sudden investors have to price that in to the gold mining stocks. So, I think my investment advice, though it's taken longer than I thought, the payoff is going to be bigger than I thought for the people who had the patience to stick out the trade.
Yeah.
Oh, yeah. I don't think gold is going to trade back below 2,000 again. I think those days are gone. I think the new support is probably just below 2,500. Is it possible that gold can go below 2,400? I suppose that's possible. That could happen. Maybe 2,350. I wouldn't wait for that. And I've been telling, our customers at Schiff Gold not to wait for a bigger break in gold. I just think you buy gold here. I think, 2,500 is, the new 2,000. And I don't think 2,500 is gonna stay here for long. I think we're going to be at 3,000 before we know it. Maybe, we could get there before the end of the year. We can start to see some bigger moves. But even if we don't close the year at 3,000, I think we'll be closer to 3,000 and 2,500 by the end of 2024. But 2025, price can go much higher than that. I was calling for $5,000 gold back in 2010, 2009, and we didn't get there. We got to 1,900. But now, I think 5,000 is low. My target is much higher now because we've printed so much money since then. There's been so much more inflation that's been created that gold is a lot more valuable in terms of these inflated dollars than it was, back then. But I think we're going to start moving quickly at some point in the price of gold. Especially when you start to see investors buying. They haven't bought into this rally. I've been talking about this is the most unloved gold bull market. You can buy gold at an all-time record high, and you're a contrarian because nobody believes in it. Nobody cares. Nobody covers it. The public isn't buying it. The hedge funds aren't there. The pensions, the endowments, nobody is buying. It's at an all-time high. So it's going to have to go much, much higher to get on anybody's radar, and then even higher to get the naysayers to capitulate, throw in the towel, and start to buy. Maybe the last ones will be the hardcore Bitcoiners who finally try to buy whatever gold they can afford with what's left of their Bitcoin. But eventually, you're just going to have a lot of people coming into the gold market. It's not just going to be some astute central bankers in the BRIC countries that are buying the gold, and me and my followers. There's just a small number of us that have been buying. We mentioned last time. We met at the New Orleans Investment Conference. Hopefully, I'll see you there this November. But that's like the oldest gold conference in the country, biggest conference. We get like 500 people that show up at that conference. They just had the Bitcoin conference in Nashville. Maybe you were at that one. There were over 20,000 people there. So that's where the excitement is, right? That people are ignoring, what's gold, but you don't want to enter a crowded trade, right? You want to be in the market that everybody isn't overly enthusiastic about. Normally the gold stocks lead the metal because investors are so confident that they want to buy the gold stocks. Now the metal is dragging the gold stocks reluctantly. And every time, look, yesterday, gold was down 0.5%, and gold stocks are down 4 or 5%. They just got clobbered on 0.5% move. Today, gold pretty much regained the entire 0.5% it lost yesterday, and the gold stocks were down again. That's how scared. The minute gold got below 2,500, that's it. It's going to crash. Get out, sell. Right? Talk about climbing a wall of worry. This is the steepest, biggest mother of all walls of worry that I've seen in a bull market. So this is like really, really early. That nobody believes in it. Even the hardcore. I got clients of mine that are thrown in the towel. I can't hold these stocks anymore. I got to get out of them. They've been in these gold stocks. So even some of the hardcore true believers are having a hard time staying the course. But it's going to be a big payday. It's when people really can't take it anymore and they're like, I'm done with these stocks. The next thing you know, they're just going to take off. And, so I don't want to have to chase them. I'd rather own them, before there's a rush to buy.